Jim, we do have to start with this. Futures are in the green, but we're talking about two terror attacks, one in Las Vegas, one in New Orleans. Do you see that having a potential impact on the markets or at least sentiment today?
Yeah, first of all, our hearts and prayers go out to those who've lost lives and families and friends of those in New Orleans and Las Vegas. You know, it just adds to more market uncertainty. I mean, we've been saying 2025 is going to be like a New Year's resolution, full of promise, but with the challenges to work through. When I talk about that and where the promises for 2025, it's simply this. We have stronger than expected U.S. growth, moderating inflation, the Fed easing. Take that together usually means good market returns, but there are near-term challenges. Fed uncertainty. We saw the Fed stop loss in December, and there's a lot of uncertainty in terms of where the neutral rate goes, anywhere from 2.4 to 3.9%. Higher bond yields, as you highlighted earlier, you know, Trump 2.0 starts in, what, 18 days now? Take that, plus the market dynamics don't look that great. We've got profit taking likely going to take place this year on the Mag 7 potential earnings disappointments, high market valuations, weak market breadth, and most importantly, a stronger dollar. All this together says a lot of near-term challenges, but 2025 will be a good year in terms of markets overall.
Gene, you're hitting on a lot of challenges we've been talking about here on this show. The dollar, some uncertainty about the market, some uncertainty about the new administration's policies. I want to ask you about one other thing. We're looking at oil prices rising. Oil's up about $4 a barrel in the last month, and we already hit this in the beginning of the show. Rates are actually 60 basis points higher than they were at the start of 2024, despite those Fed cuts. Are you worried about inflation? Are you worried about the rate cut path? You know, right now it's 2, but maybe even not even those 2. Some people, some whispers about a possible hike. Worried about the Fed influence of the market going forward?
Yeah, I think obviously inflation is a big uncertainty. I think the Fed will cut no matter what this year. We are on the page, the Fed will cut rates. One of our key themes for this year is that the Fed will cut rates. And they're a good friend for the market, but not as good of a friend as you thought they would be, because they will cut rates less than the markets had anticipated. They're still going to cut, but less than expected. Why do we say that? Because still, the Fed funds rate is about 2% over inflation. It's pretty restrictive right now. Not yet, but it will be more restrictive. Also, you look at the fact that uncertainty around economic growth, pushing growth higher. Take all this together, inflation, economic growth, there's uncertainty, but the Fed will still cut rates. The Fed needs to cut rates in 2025.
All right. Worried about market concentration. That's another issue that was really kind of raised at the end of last year, the final trading days. We had our CNBC data team run the numbers. So if you look since Election Day at the S&P, the Magnificent Seven, it's 95% of those gains, give or take. That's a lot of concentration, a very narrowness in the market. Does that concern you as we go forward?
Definitely concerns me. And we talked about this before, New Year's. One of my biggest New Year's resolutions is going from FOMO, fear of missing out, to JOMO, the joy of missing out. Looking at stocks beyond the Magnificent Seven, looking at stocks beyond large cap growth. Here's an interesting stat. Last year, the S&P 500 had 57 record closing highs. If you think about in terms of the number of trading days we had last year, it's about 22% of the time. This is just the 7th year since 1953 that we've had 50 plus record highs in 1 year. Take that together, high valuations, narrowness of the market, and what you said before, Frank, was a great point. S&P up about over 20% last year, but if you look at just the equal weight S&P, up about 11%, and the Mag 7 in 2024 drove about 63% of those gains. Huge narrowness of the market. Not a big fan, worried about that for the markets.
Okay, so you're not a big fan. You gave us your themes for 2025. One of them is that diversification is back. What do you mean by that? Are you talking about bonds? Are you talking about alternative assets? Are you talking about Bitcoin? When we're talking about diversification in your mind, what's the #1 way you want to play it?
Yeah, I think diversification is a long-term investment strategy. It has worked for so many times.
But give us the near-term way that you want to make it work. Give us everybody says they're a long-term investor. We need some actionable ideas in the near term, Gene.
I do think a market pullback, market correction is likely. We didn't get one all of last year. They happen to occur once every year, every 13, 14 months. So how do you protect against that? Diversify. Looking at liquid alternatives, looking at other asset classes with cheaper valuations, large cap, value, small cap, mid cap look pretty attractive. Even non-US. I know Europe is struggling. I know there's concerns around the markets, but there's some opportunities, especially with low valuations. Look at areas beyond the large cap growth, beyond the Magnificent Seven. That's diversification. Here's a great point. Stock market on average has a intra-year pullback of about 13.9% per year. It's a normal part of investing, pullback. And how do you take advantage of this? You be diversified to protect some of that downside, mitigate against that market volatility.